Hello, everyone. Welcome to this exciting session on the topic Trends in Total Rewards in Track 1 of NexTech Southeast Asia HR Summit 2021. The COVID-19 pandemic has forever altered how organizations around the world operate. And one of the challenges that most of them face is to innovate proper rewards and recognition strategies for the employees to keep them engaged and motivated amidst these testing times. Businesses have always found it challenging to have an effective performance management system as it is. And in the post pandemic world, it has become more of a struggle to come up with a strategy that meets the needs of businesses as well as employees. In this session, we'll discuss how, in the post pandemic world of work, the reward strategy in the business world has changed, and how companies can put in place an effective performance management system that takes care of employees' financial and emotional needs and recognize their efforts in the best way possible. And now, it's my great pleasure to invite our speaker for this session, Sajjad Parmar, Head of Reward-APAC at eBay Singapore. Sajjad Parmar is Head of Reward for APAC at eBay. He started his career with Unilever in Pakistan, moving with them to their Singapore office in 2008. He then moved to GSK as Regional Reward Lead for Asia, while also doing stints as the Regional HR Transformation Lead and Head of HR for Malaysia before taking on his current role with eBay. He also has extensive experience in talent management and acquisition, HR transformation, performance management, and HR analytics. So, without any further delay, let me hand over the frame to Sajjad. Over to you.
Hi, good morning, good afternoon, good evening, everyone. I hope everybody's doing well and the best of health. My name is Sajjad Parmar, and I am the Head of Total Rewards for Asia Pacific for eBay Inc. It's my pleasure to be here, sharing some thoughts over the next 20-25 minutes on the evolving trends in the world of total reward. And what I'm hoping to do is to share some insights, some trends that I have been observing over the past few months in terms of what are some of the areas within total rewards where we're seeing things change and evolve. Let me first start by really talking about what is the concept of total reward. You know, the total reward umbrella is quite wide, as you can see from the slide here. It's no longer just limited to the traditional comp and ben areas within compensation as well. There are multiple areas like short-term incentives, long-term incentives, sign-on bonuses, commission plans, all of that. So within compensation itself, it's quite wide. And then within traditional benefits design, it's just not the insured benefits and non-insured benefits, but the benefits area has sort of overlapped now with the whole concept of wellness. And I'll talk about wellness in a little bit as well. But within wellness, the traditional physical wellness concept has evolved. And now we're looking at really four pillar, within the wellness area, which is physical, emotional, financial, and community/family. Within the ambit of total reward, we also have things like performance management, which is critical to an organization's success. And then if I was to expand in terms of the work that we in professionals in total reward do, we work on things like M&A, mergers and acquisitions, which in some cases is quite a substantial part of our jobs. We've got the whole area of global mobility, because it's linked to talent management. How do we make sure that we're moving around talent in the best possible way to support business growth and sustainability? And then we've got the concepts of organizational design, job evaluation, which actually in many ways is very fundamental to the work that we do in total rewards. Because the impact of jobs and the grading and the size will have an impact directly on compensation. And then lastly, and not the least in any way, the whole concept of analytics, which is both from an HR analytics perspective, but also reward or compensation pay analytics perspective. Why is this important to understand? Because employment cost is the number one or the number two cost to any business in the world, right? And so if you think about the amount of money any business spends on employment, it becomes very critical that we understand what the reward levers are, what the trends are, where are we moving? Because if we're not going to optimize our cost well, then it is going to have a direct impact on both the top line and the bottom line of any business. Having worked in reward for many years now, I can absolutely say with confidence that reward programs impact both the top line and the bottom line. Top line, both in terms of performance management and incentive plans, which are very obvious. But like I said, the bottom line specifically in terms of employment cost, whether it's salary, benefits, or equity cost. And then ultimately the organizational structure, because the shape of the organizational structure means that every job has a so-called dollar value attached to it, right? And so depending upon how you shape your organization, it's going to have an impact on the cost of the business. So understanding these fundamental concepts is very important in terms of understanding how reward programs operate and the impact they have. I will move over to some of the evolving trends that I talked about. I want to share 3 or 4 quick ones in the limited time we have. I'll start with pay equity first. Over the past, I would say 3 to 4 years, pay equity has become very prominent. If you think about all the DE&I work that's happening across the world, pay equity is pretty much upfront as far as a D&I work is concerned. In one of the researches that Gartner has done, 1 out of 3 employees are reporting pay gaps, right? That means 1 out of 3 employees feel that there is a pay gap as far as their salary is concerned. Now, obviously, when we talk about pay gap from a pay equity perspective, it's to do with gender, race, age, your nationality, your religious background. That means based on one of these factors, there occurs a pay gap, which is not fair. And that's what people and employees are feeling about. If you think about why that's important, just the perception of pay gap based on the research done has a 16% impact on the intention to stay. That means if I feel that there's a pay gap, and obviously we know typically this happens with our female colleagues, where there's a massive gender pay gap across the world, just the perception will lead to 16% drop in intention to stay, which actually translates to a 2.2% increase in turnover. Now you might say 2.2% increase in turnover is not much, but the reality is that every person that leaves has a cost impact. There's a cost of attrition. So if your overall turnover increases by 2%, that's actually a lot of indirect cost. And that's why, and again, this is just the perception, right? This is not actually even the problem. But why do we create this perception? And that's what we're trying to fight. What that also means is that this intention of leaving will lead to a number of things. It has a direct impact on manager quality. It has an impact on knowing that you might get more money for doing the same job in another country. It's actually experiencing 50% worse than pay freeze and experiencing reduction in benefits. So there are very implicit factors that come into play just by the perception of pay gap. Now, the typical thing companies do is to do a very reactive approach, which is, there's a gap, let's just pay it out and we'll equalize it. The challenge is that you can't do this on a year-by-year basis. If you're not fundamentally solving the problem, then you cannot add money every year to finish the pay gap, right? So ad hoc adjustments just don't work. The reality is that there's a price to pay, like I said already. Just having that perception has an impact on your retention strategy. And that is something that you need to think about and something you need to solve for. And the fundamental area where this has an impact is essentially hiring decisions. Because when we hire somebody at the wrong pay, essentially that becomes a chain reaction. In future, when you promote them and you give salary increases because you started them at the wrong area, that's going to have an impact. So you can see that the main issue with pay equity starts at our hiring decision. And so my advice to all the HR professionals is that when we're hiring, we have to make sure that we're getting the employee in on the right pay so that in future, we're not solving for this problem. And so when we think about the entire talent life cycle, from recruitment to hiring, performance management, and promotion, it's really a closed loop, right? Each of these areas has an impact in the way we look at pay equity, in the way we drive pay equity. And if you start right, again, it will reduce the problem, but not completely. You will have challenges like biased performance management, biased promotion evaluation, right? And so I think what you have to do is to build a framework that has checks and balances and checkpoints, which you are using to make sure that these pay gaps don't appear. I will move on to the next topic, which is pay analytics. And again, as one of my favorite topics, I would say that this is what we call a pay analytics curve. And we have moved the margin a little bit from typically benchmarks to correlations. But I think what we have not done is move to causations and predictions. What we ultimately want to do is to move the ladder on the right side, right? Where we want to be is really around causations and predictions. Most companies do benchmarks, some do correlations. The impact, true impact, is when we start to think about causations and predictions. So that's my challenge to all of us, that we need to move the needle and move to the right. I want to leave you with 2 or 3 examples of the impact I'm seeing around. A lot of investment is being done as we speak right now on pay analytics, on acquiring pay analytics skill and hiring the talent that understand analytics. Simple example is the talent flow within an organization. This is a very simple chart, but in a nutshell, it tells you how many people were hired, how many people were promoted, how many people left the organization. It's one slide, but it has a lot of insights. And this is just one example of what pay analytics can do. This is another example from a reward perspective. This is a summary. So for a multinational company, this is a summary of your reward competitiveness across all your key markets by guaranteed cash and total cash. And you can color it the way you want. As you can see, the numbers are there. You can say, okay, less than 90% would be red, and you can say above 110% would be blue. So you have to decide based on your reward strategy what color scheme you have. The fact is, this chart gives you a very simple way, effective way of telling you in what markets you are competitive, in what markets you're not, and then ultimately help you that if you have limited budget, where do you need to invest? Where you have more reds, obviously you want to invest most of your money there. Where you have blue, you're generally being paid well, and maybe you need to spend money less. You could do this by grade, you could do this by function. And that's the beauty of this chart. It's a very simple thing. If you have data in Excel, you can actually create this in Excel through a pivot table, right? Again, from a cost perspective, employment cost perspective, when we talk about managing top talent, if you do not know the multiplier of employment cost in your markets, you will not be able to come up with a strategy to figure out how to move your talent, top talent, right? So if a talent, let's say, if it takes 6 times salary to move an employee from a functional manager to a functional director in, let's say, about 8 years, then without having this analysis of cost multiplier, you will not be able to create an effective talent strategy, right? So you can see in developed markets, it's easier to do this, but in developing markets, the aggression has to be a lot higher. The pay increases have to be a lot higher. So in markets like India and China, you need to have a 6-time multipliers over 8 years. That's very aggressive salary increases. But that's the reality. You cannot be effective and you cannot manage your top talent if you don't give acceptable salary increases, and you're going to lose them. So when you think about your talent management and your talent strategy and how you manage people and progress them, having an understanding of the employment cost differences between grades by markets, or even just for your own market, is very, very important. And lastly, again, doesn't have to be a very fancy slide, but this really talks about your performance differentiation for bonuses, right? So you've got the executives and non-executives, and all it's showing you is that based on your rating system, how well are you differentiating your reward for bonuses, right? So are you really making sure that you're leaning in on your top talent? So if you take an example of executives, anybody who got a higher rating got 140% of target. And somebody who was lower got 30%. That means there's real differentiation between your top talent and those who are not doing well. And this is a very simple form of analytics, but it really drives key decision-making on the organization. If your leaders say, I'm losing employees, then you can go back and say, by the way, but you're not differentiating well. Why is the on-target guy getting the same as high performers, right? So to create differentiation, to create motivation, there's a very simple example that you can use. And this is just 2 or 3 examples of analytics. There are plenty, dozens of ways you can drive analytics, both from an HR perspective and from a compensation perspective. I'll move to the next trend, wellness, which I would say, generally the evolution of wellness, as you can see, has moved from disease management, physical to holistic. I talked about the 4 areas of holistic wellness: physical, emotional, financial, and community. The reality is that in the past, I would say 18 months since the pandemic has started, 2 particular areas have taken a lot of focus. There's been a lot of worry from companies. I'm seeing almost every company invest in those 2 areas, and those 2 areas are financial wellness and emotional wellness. And why is wellness important generally, right? Forget about the impact it has on engagement, like the slide shows here. You have an impact on engagement, on how employees feel about it, and sort of connecting it to really core tangible areas. So like improving how you would for dental plans, matching charitable donations, providing commuter benefits, right? Just by providing wellness benefit, it equates to these things. The reality is we've known from the pandemic how important emotional or mental wellness has been. 50% employees across the world have said that they have seen a reduction in their mental wellness since the pandemic has started. That's a huge number, right? And then recently, in the past 3 to 4 months, we're seeing a lot of concern around financial wellness, right? The employees' need have changed. I can say just in Asia Pacific, a recent finding said 40% of employees live on paycheck to paycheck. And about 50% of employees at any given point in time are worried about being made redundant, right? And so when so many employees are dependent on their monthly paycheck, then it's very important that they understand how to manage financial wellness. When you increase your anxiety, right? When you know you might lose your job, obviously it's going to have an impact on the quality of life. It is going to have an impact on your family relationship, right? So we need to make sure that we are educating our employees in becoming more financial savvy, making more financial wise decisions. If they have debt, if they have budgets that they can manage, if they are looking towards short-term savings, how do we manage that? And we've seen from research that people who have financial stress will take more time off because they're not unwell. They will be in poor health, right? They will be more disengaged from work, and they might have to work longer. And it's just logic, it's just common sense that if I'm in financial stress, it's not going to be the quality of life that I should be living, right? So it's very direct and it's very obvious. And the pandemic has just made sure that it's compounded, right? So many employees are under stress. I get feedback from my employees in my company that many of our employees' family members have lost jobs, are under financial stress, or they've seen a pay cut. And how can they do better with this? So that's financial wellness, which I think absolutely companies are looking at and investing in and trying to make sure that they educate their employees in this area. Second one, which is very obvious, which I talked about, is the entire concept of emotional health, right? And my challenge to you is, I'm sure you have done well for your companies in the past 18 months around emotional wellness, but you need to dig a little bit more. How are you measuring it? How many people are talking about emotional wellness? Do you have a EAP program that is measuring the areas of emotional stress, right? Do you know about the suicide rates in your country, right? Do you know that EAP providers actually can sense an employee what they call red flags, where they think that the employee is actually considering suicide, right? Do you know how many people are suffering from depression? And emotional wellness is not something a lot of people actually talk about. The utilization and the hand raising is already very low, but something that we companies must think about, and we must work with providers and experts in trying to figure out what best way we can do. And I think this journey is going to continue. This is a trend that's not going to change. In the new ways of working, emotional wellness is something that we will have to think about and work up solutions to help our employees. So this is a big trend that I would absolutely say for us to focus on. And then lastly, performance management. Over the past, I would say 20 to 30 years, any research that you pick up, you will see that by and large, 70%, 65 to 70% companies are not happy with the performance management system. That means at any given point in time, 2 out of 3 companies are looking to revamp the performance management system. They're not happy with it, and it's not effective, right? And this is just one survey on performance management. I have come across plenty of survey results where you will see really, really horrendous numbers around the effectiveness of performance management system. Employees are not happy with performance management system. They think their performance evaluations are not effective. 50% is saying that the annual appraisal does not actually really is an accurate reflection of their hard work, right? Even CEOs are saying that the performance management system doesn't work, right? Even HR employees are saying that they don't think actually it's very reflective of employees' performance, right? So when you talk about assessment, when you talk about evaluation, more importantly, when you talk about how we reward employees based on performance management system, if the system is ineffective, obviously the reflection in terms of reward differentiation is going to get impacted, and it's not going to help anybody. What we're seeing now, something that's seeming to work a little bit more, is to have what we call a growth mindset culture performance-based system. What that means is that rather than giving employees feedback, okay, you need to improve this point and then you'll grow, it's providing feedback constantly and continuously. And that's to ensure that employees and managers are having a growth mindset at any given point in time. No longer are you having once or twice discussions in the entire year. You're having regular conversations with your employee. It's pretty much live feedback, maybe on a weekly basis, if not on a weekly basis, bi-weekly basis, right? So the coaching concept is coming in very heavily now, and that's impacting feedback and performance on a live basis. And this is a trend I've seen over the past, I would say, about 18 months or so. And I think the pandemic has accelerated this, because no longer can I walk over to my employee or my manager and ask for feedback, right? Because we're working remotely, managers and employees need to talk to each other a lot more to get things done. What you have to do is to add this concept of coaching. Managers actually, rather than telling employees, I want you to do these 5 things, they're coaching employees. And a lot of companies I've heard recently are actually agreeing that the concept of coaching from managers actually is far more effective than direction, right? And to create that the culture of recognition, it's also about focusing on the whole concept of total reward, right? Because ultimately, if you're going to provide coaching to employees, they're going to expect more fair assessment at the end of the year, right? Ultimately, it will come down to reward. And so we're also training, and companies are also looking at the whole concept of total reward. It's not just about the salary increase you get, it's about how much bonus you get. It's about equity differentiation. It's about recognition. It's about how do I promote and progress my top talent, consistent top performers through the performance management system. So this entire concept of performance management system has evolved, is going to move. Many companies are actually discussing as we speak. Many of my peers have told me the companies are discussing how to change aspects of performance management system for now and for the future. And so I think as you think about your companies, the effectiveness of performance management system, and performance management system impacts pretty much every area of HR, right? That's what we do every day, and how we talk to our managers, and how we drive business performance. So I would say absolutely this becomes quite central to the work we do. And the whole concept of growth coaching will be at the central point of performance management system. With that, I will stop. I know the time has been short. In the last 20 minutes, I hope I've been able to share just a few snippets of what I think are some of the big trends in the world of total reward. And I hope that you found useful. If you have any questions or any feedback, or you would like to take the discussion more, please connect with me on LinkedIn, and I'll be very happy to connect. I appreciate and thank you for your time.
Thank you so much, Sajjad, for these incredible insights. The trends in total rewards in the post-pandemic world of work were very insightful and engaging. It is true that reward programs impact top line, that is performance management, and bottom line, that is employment cost. Concluding this session, I would like to thank Sajjad for joining us here today. It's been a great pleasure. I would also like to thank everyone for joining us. Do stay tuned for more insightful sessions throughout the day and an exhilarating magic performance towards the end of the day. Thank you.